Move our focus to the banking sector. The banking industry has witnessed phenomenal evolution in the last decade. Tier 1 banks continue to dominate the industry across performance metrics. Interest in the lending structure of Nigerian banks has been magnified by the plunge in global oil prices. Robert Omotunde, investment researcher at Afrinvest, joins us for Focus on Banks. Robert, it's great to have you on the show with us. So you've come out with banking sector reports. I guess you could run through the key points that have come through from that.
All right, thank you, Didi, for having me this morning. What we did, we launched our banking sector report last week, and we titled it "Looking Ahead: Nigerian Banking in the Next Decade." And what we've done was to look at the evolution of the Nigerian banks in the last 10 years, and looking ahead into the next decade. And a lot of factors have shaped the banking sector in the last 10 years. Starting from the regulatory space, we've seen a lot of regulations coming on board. Before the consolidation in 2005, we saw that a lot of Nigerian banks, we had about 89 banks, really. And these are small banks with minuscule capital. And then we saw that the then CBN governor was, in person of Charles Soludo, was able to come up with some guidelines for the recapitalization of banks. Before then, we could say that the largest bank in Nigeria, had a capital base that is far less than, the least capitalized bank in Malaysia, for example. And what we saw was, a sort of recapitalization which brought the banks, back to, to speed. And of course, we saw a lot of things that happened after the recapitalization. We came up with 25 banks, and after that, the banks were found to be, a lot of risk, were found to be involved in the running of the banks. And of course came the CBN governor, who was able to clean up the bank's balance sheet, and of course to the point where we have Godwin Emefiele. That's from the regulatory space. But what we've seen in the last 10 years has been that Nigerian banks over the years have been able to weather the storms of the different challenges, that has bedeviled the sector, the industry, if you may put it that way. And of course, if you look at the metrics of the banks, for instance, if you look at it in terms of performance, how they've been able to grow their gross earnings, from the last 10 years, even dovetailing it into their profitability, amidst all the risk factors which the banks have been facing, they've been able to, weather the storms. And what we are saying, looking ahead into the next 10 years, is to say that, yes, Nigerian banks have come this far. Where is the next phase that we see Nigerian banks, in the next 10 years? And one of the things we did was to look at some factors. If you look at the bank's gross earnings to GDP, and you compare it amongst emerging markets, the BRICS countries, for example, you see Nigeria with a ratio of about 30% relative to, the BRICS average of about 9%. Or you look at in terms of net margin, you could say that Nigeria is there 20% relative to average of 22%, in the BRICS average. But the major thing that we are looking at in terms of lending, if you check across emerging markets, lending in Nigeria, is being tilted more towards the oil and gas space. We see lending of about, on the average, about 27%, industry average to the oil and gas sector, relative to the contribution of that sector to GDP of about 12%.
And you're saying in your report that, you think the banks need to increase their exposure to non-oil, to the non-oil sector, but don't necessarily need to decrease their exposure to the oil sector, despite what's going on with
exactly. So what we are saying now is that, yes, the banks are exposed to the oil and gas space. And of course, if you analyze the last financial year of the banks, you saw that a lot of them booked, impairment charges, related to the fiscal challenges that we're having in the economy, and the fact that some of these loans are not doing quite well. Why we're saying that the next phase of banking, is going to be tilted more towards the manufacturing sector or the service sector, as we have seen across emerging markets. Okay, if you check, yes, lending in Nigeria is tilted towards oil and gas, but if you check, across the BRICS country, you see a skewness towards manufacturing sector and the service sector. And what we're saying is that Nigerian banks will need to necessarily consider lending towards the non-oil sector than the over skewness, if I can say, to the oil.
When you look at the earnings in general, I mean, you've come up with an analysis, and you've said that gross earnings in general in the banking industry went up 17.7% in last year, full year 14, and PBT went up 32%. Are you optimistic that those are the type of numbers we can see this year? I mean, there's been a lot of challenges this year, from the low price environment to the changing government, a lot of things that have slowed down the sector. So what's your outlook for earnings?
Yes, for earnings, our forecast is a little conservative for 2015, stemming from the various challenges that the sector has faced. We saw that a lot of loans that were booked were not doing quite well, and banks are even less aggressive in terms of booking loans, particularly in this current financial year. And we've seen that a lot of banks have shifted. There's a reallocation of assets from investment securities to risk asset, although this is also telling on their books. So what we are looking at in 2015 is a tempered growth in terms of earnings. Our average forecast is about 15%, while we still believe that the Tier 1 banks will still continue to take the lead in this space. Of course, we're seeing that a lot of Tier 2 banks are also coming up, but the major driver of earnings growth in 2015 will be the Tier 1 banks.
Okay. Let's leave it there, Robert. Thanks so much for joining us in studio today. Robert Omotunde is investment researcher at Afrinvest.